Before the opening bell, U.S. indices closing lower on Thursday, pressured by shares in energy, automobiles and components, and capital goods sectors. On the economic docket, initial jobless claims decreasing to 218,000 in the week ended June 16th, while continuing claims increasing to 1.72 million in the week ended June 9th, from 1.7 million previously. In addition, the Philadelphia Fed Index falling to 19.9 in June, and the FA Housing Price Index increasing by 0.1% in April. In addition, the Fed releasing stress test results stating that all 35 banks have sufficient capital to withstand a global recession. And finally, the bank holding companies with less than $100 billion in total consolidated assets no longer subject to supervisory stress testings. Decliners ahead of advancers, 70% of S&P 500 constituents trading lower yesterday. Now, after the markets closed, Goldman Sachs having the lowest minimum supplementary leverage ratio, 3.1, amongst other banks in the Federal Reserve stress test. Alphabet's Google discussing selling hardware in China through JD.com, this according to The Information, and Tesla planning to close a dozen solar installation facilities across 9 states here in the U.S., reporting by Reuters, citing sources. Now turning overseas, Asian markets mostly up today. The Nikkei down about 0.75%. The Hang Seng up 0.15%. China CSI 300 up 0.44%, and South Korea's Kospi up 0.83%. European markets rebounding, and U.S. futures calling for a positive start. Now, in terms of expectations today, CarMax first quarter EPS seen at $1.24, while on the economic docket 9:45 in the morning, we have June preliminary market U.S. manufacturing PMI, services PMI, and composite PMI. Turning to the markets, the S&P 500 sees its key resistance at 2762, while the Nasdaq sees its watch level at 7207, and the Dow Jones sees its key resistance at 24,560 and is in focus, as technically the relative strength index below its neutrality area at 50. Short positions below 24,560 are favored, with 24,400 and 24,345 in extension.